One of the questions that I've gotten after showing you guys my strategy for trading boom and crash, I believe it's the best strategy in the world to trade boom and crash. You can watch the videos on this channel. One of the questions that I was asked was, what's the best time to be trading boom and crash? What's the best time to be trading boom and crash? So we are going to look into that question in this video. So if you are new on this channel, please consider subscribing so that you do not what? You do not miss future videos. Go ahead and like the video. That's how you make me want to continue sharing these videos, sharing with you the knowledge that I have in the markets, how I've been trading, and all the stuff for free. You can, go through this channel and you find I share a lot of value all for free. If you are also looking to download stuff, forex robots, indicators, books, stuff for your trading, there are links in the description box below. Visit those links and see if you cannot find what you are looking for. You can basically download these forex robots, indicators, systems, and stuff all for free. Everything that we do on this channel, guys, is for free, because I know some of you don't have money to buy robots, indicators, and all that stuff. Some of you also ask me about the broker that I use. The link is in the description box below. Okay, so let's talk about the best time to be trading a boom and crash, because many people ask me that question as well. So I guess it's a popular question. What's the best time to be trading boom and crash? So the first thing that you need to understand, the first thing that you need to understand about boom and crash is that boom and crash are what we call synthetic indices. They are what? They are what we call synthetic indices. And what does it mean? What it means is everything that you are seeing when you are trading boom and crash, when you are trading step index, when you are trading volatility 75, volatility 50, 100, when you are trading with this broker that's called the deriv. The synthetic indices means they are artificial instruments, they are artificial assets, they are artificial pairs with no connection to real world applications. That's the first thing that you need to understand. That's why you can trade these synthetic indices 24 hours a day, 7 days a week, whether there is a holiday, whether there is no holiday, whether it's New Year's, whether it's Christmas, or even if there is a war happening. I think if the deriv server is up, there will be trading. So that's what synthetic indices mean. The synthetic indices don't have actual real world connection, and they are not even affected by news. They are not affected by world events. That's why you never see any spikes and stuff like that. Of course, this is boom and crash. If you go to the 1 minute time frame, 5 minute time frame, you're going to see the spikes. When it's boom, it spikes up. When it's crash, it spikes down. But those spikes have got nothing to do with news like FOMC, what's the other interest rate decisions that you find in forex trading. They have got no actual real world condition. So what does this mean? It means for you and me, any time is a good time to be trading boom and crash. For example, the best time to be trading boom and crash for me is when you are just free and you spot an opportunity. Otherwise, boom and crash, they are not affected by anything that's happening in the real world. They are not affected by news, world events, or anything. You find that the way it's just moving is just continuing moving. Synthetic indices, they are moved by some proprietary software that tries to randomize these movements that has been developed by the derivative broker. They are sort of randomly generated by this algorithm that's behind the movement in these markets. So there is no real world application or connection to, it's not like trading gold. When you're trading gold, you actually know that this is the actual real world price of gold. When you're trading silver, you can actually tell that this is the actual real world price of silver. The same thing when you're trading Euro USD, you actually know that this is the real world price of the US dollar. This is the real price of the euro compared to the dollar and stuff like that. They are actually real world connections. But when it comes to synthetic indices, all this that you are seeing is artificial. This is artificial movement. All of this that is randomly generated by an algorithm in the derivative servers. Of course, people ask me, so does that mean that this is like manipulated and stuff like that? Deriv assures us that it's not manipulated because it's actually also checked by a third party and they've got like checks in place, and because it's a randomized system by the algorithm on the servers, there is also a guarantee that there is no interference from Deriv, the broker. They've got nothing to do with it as well. Everything has been left to this algorithm software. So the best time to be trading boom and crash is basically when you've got time to look at your charts and to actually place trades. Otherwise, whether you wake up at midnight, whether you wake up early in the morning, whether you wake up during the day, whether you find free time at 10 a.m., at 12 p.m., 1500 hours, every time is the best time to be trading boom and crash as long as you spot an opportunity. As long as there's an opportunity, you spot an opportunity, every time is the best time to be trading boom and crash. You can trade synthetic indices 24 hours a day, 7 days a week. So yeah, I hope I've answered your question. The best time to be trading boom and crash is anytime that you spot an opportunity, anytime that you are free to be trading, anytime that anytime that you feel, let me just wake up and look at the charts and you happen to spot an opportunity, take that trade and make money. That's all that's to it. Subscribe, like this video. Until next time, bye.